Abbie Zvejnieks actually downgraded VF Corp to neutral and upgraded Skechers to overweight. Abbie, let's start off with VF Corp here and give us a sense here as to why you're seeing some material softness there.
Yeah, so I think our previous overweight thesis was based on a Vans brand turnaround. The brand got over-inventoried, relied too heavily on core classics, and we are starting to see, some traction from new styles, new product that they're putting out. But I think that the current state of the wholesale footwear environment in the U.S. is going to make it challenging. The timeline of that Vans brand turnaround, we have less certainty around, and that was really the reason for our downgrade. There's still too much inventory in the channel. Open-to-buys are extremely tight for wholesale retailers, and I think when open-to-buys start to open back up, they're going to favor brands that are seeing strong sell-through in the channel right now, and unfortunately, Vans is not one of them.
Well, okay. Well, let's talk about Skechers then. Is that just like the hipper thing right now? Is that what kids are buying?
I don't think it's necessarily that kids are buying, but they're seeing strong direct-to-consumer trends, which indicates strong underlying demand. They've had a lot of new products. I don't know if you've seen their new slip-ins product, but it's a technology that you can slide your foot in really easily, and you can use that in an array of silhouettes. And so that's seeing really strong traction with consumers and strong sell-through in that wholesale channel. So we think that restocking will occur as those open-to-buys open back up. And there's also Skechers business is 60% international, and we're seeing really strong growth there with, some tailwinds in China for that recovery as well.
And given that, so much of the growth is coming from overseas, we spend a lot of time talking on this program about potential cracks in China. Of course, the rebound over there hasn't been as strong as maybe some had predicted earlier in the year. When you think about China in particular, how much of a risk is that potentially?
Yeah, so Skechers' expectations have been really tempered when it comes to China, and I think the CFO John Vandemore has been very clear that they're not expecting a linear recovery in China, and so I think that successfully have baked into guidance a conservative view on recovery in that market, which will be a benefit in the future. Although they are seeing better than expected trends in that market, and so I think coming away from a conference that we just had, our Growth Frontiers conference, where the CFO spoke, I actually felt more optimistic on growth in China in the near term.
And Abbie, I just want to go back to VF Corp and your downgrade there. Of course, the Vans turnaround maybe not going as rosily as expected, but when you think about the rest of VF Corp's portfolio, what else under their umbrella could maybe temper what we're seeing out of Vans?
Yeah, that's a good point. The North Face brand has continued to produce strong growth. It grew 17% constant currency in their last fiscal year. And so, I think that they've successfully capitalized on secular tailwinds in outdoor and active, and have introduced a lot of great new products, which, is the thesis that they can use this same playbook now with Vans and in this turnaround. There's some other smaller brands that are doing well, including the Ultra brand, which, is a running shoe brand. We're still seeing a little bit of weakness in Timberland and Dickies, but, upside could come from that North Face brand, in my view.